Hey everyone, Lynn and Joseph with Saltmarsh Properties here. Hope you are having a great day, and we are here to just bring you some more information on real estate here in the greater Charleston area. And today is a topic that's near and dear to our heart because we love doing this, is what it is like to buy an investment property in the Charleston area, and specifically what that looks like in 2026. So if you've been thinking about buying an investment property, in 2026, this year is a little bit different, right? It's different than what we've dealt with in the past. So we're going to go through some do's and don'ts and some tips and tricks on it.
Yeah, so Charleston is, as we've been saying for a while, is still a highly desirable spot. People continue to move here, vacation here, retire here, work here, and build long-term lives here. But the investment conversation has changed. Prices are higher. Interest rates are higher than they were during that ultra low rate years that we talked about that we're just not in anymore, right?
Yeah.
So insurance matters now. You have to learn a little bit more about flood zones, how that could affect resale or improvements. Rental numbers need to be analyzed more carefully if indeed you're putting it into the rental market. And then the short-term rental rules are not something you can figure out casually after closing, and they kind of change a lot even throughout the process. So it's really important you do that research.
Yeah. So what we're going to do is just kind of go through what it looks like to buy an investment property and not the hype side of it, right? The fix and flip it on the HGTV, but actually what it takes and how you do it in a more practical, informed way that based on from a numbers first perspective.
Yeah, because real estate can still be a powerful wealth building tool. We're definitely hoping for that. But in this market, the right property matters, the right strategy matters, and the numbers have to make sense before the emotion takes over.
100%. And Charleston continues to attract lots of people, like Lynn was saying. So lifestyle, job growth, tourism. I mean, we're still one of the top growing cities in the nation of people moving here. So this is a really big drive to people here. And then mention all the fun stuff, right? It's like we're talking historical neighborhoods, the part of the Charleston that we love being a tourist in our own town. It creates multiple types of demands, specifically those who are looking to rent.
Yeah, but that does not mean that every property is automatically a good investment. So you have a multiple range of options. You have the downtown condos, a single family, let's say in West Ashley, maybe a townhouse in Mount Pleasant, a property near a military base, and a beach area short-term rental are all very different conversations. They have different purchase prices, they have different rental demand, insurance profiles, regulations, maintenance needs, and exit strategies.
Yeah, so the first question really isn't should I buy an investment property in Charleston? The better question is what kind of investment property fits my goals, my budget, and then my risk tolerance, which is always something that we talk about, is what is your risk tolerance? And then of course your timeline.
Right, so in 2026, we have to talk about the fact that the cash flow might be tighter. We need to be realistic about that. With higher purchase prices and mortgage rates still elevated compared to 20 and 21, many properties do not produce easy cash flow on day one, but we do have good news about that, which we'll talk.
Yeah, I mean, investment property loans are often different from primary resident loans, which is something to keep in mind. They require a larger down payment, stronger reserves, right? They're going to be they're going to scrutinize your financial situation a little bit more. Higher interest rate, depending on the borrower, the property, the lender, and the type of loan that you have, for sure, or the type of property and loan that you have. So for conventional investment property loans, buyers should be prepared to bring about 15 to 25% down. Obviously, you could bring more if you wanted to, depending on what your financial goals are and your cash standing.
What that means is the days of assuming a rental will automatically cover everything are mostly gone. Investors need to look carefully at the full monthly cost, mortgage payment, taxes, insurance, flood insurance, if applicable, HOA fees. Don't forget vacancy that you have to think about, property management if you're going to get one, the landscaping, utilities, and then future maintenance and repairs.
Yeah, and that's important to know because at first glance, properties could look really attractive and you could think, man, this is going to be a great everything based on what a limited list would be, right? But the real cost of ownership, the investment picture can really change quickly. So that does not mean you should not buy. It just means that you need to analyze the deal more correctly.
Which is why we said earlier, we need to start with logic and strategy, not necessarily emotions. Because one of the biggest mistakes investors of Charleston make is they fall in love with the property before they're clear on the strategy. For instance, if you travel here and you vacation here and you have that nostalgic, then you're like, okay, that's what I want to buy. But if you start to tour homes, you need to know what you're trying to accomplish. There are a couple of different answers to that question. Are you looking for a monthly cash flow? How about long-term appreciation, a future retirement home, Maybe a property for your child if they're coming to school here. We have a couple of those that are starting to look into that.
Right.
What about a second home that might produce rental income? If you're considering long-term or midterm or short-term, those all have very different spreadsheets.
Yeah, they're very different strategies. And a property that works for long-term may not work for short-term or midterm, right? And a property with strong appreciation potential may not cash flow immediately, yet that could be a good potential for you, right? And the property that looks great online may have insurance issues, flood insurance that you'll need, HOA fees that you're not aware of, and rental restrictions, which is a big one we're seeing in a lot of even the larger neighborhoods. In the more desirable neighborhoods that could bring in renters, is we're seeing HOA restrictions on what percentage could actually rent in the neighborhood.
And we have a video that discusses the flood insurance piece because that brings up so many questions. So look for that video. It's on our YouTube channel. So back to in 2026, your question is not, is this a good house? It is this the right asset for my strategy?
Yeah, and so again, for many investors, long-term rentals are still the most straightforward strategy, right? Buy and hold. Charleston has demand from relocating, as we've said. Local residents who aren't ready to buy, right? They're still maybe exploring the area. Medical professionals, military families that may be transient, students and young professionals that are maybe not ready to make that final decision on where to buy.
Yeah, and that's what we've been doing is we kind of focus on that long-term appreciation. It's also okay to say, okay, a piece of property in Charleston, because we also have videos that check in on our quarterly stats. Our appreciation stays pretty strong here. But rental performance can vary widely depending on the neighborhood, the property type, all the things we've already kind of touched on. Don't forget, you may have school zones, pet policies, and whether the property itself feels clean, functional, and well maintained. You don't want to just use a broad Charleston average to justify a specific property. You want to look at actual comparable rentals.
Right.
So what is rented nearby? How long did it take? What condition was it in? Does it have a fenced yard? Was it updated? Was it close to major employers? Or think about this, schools. We bought an investment property near where school is going to open, and so we're hopeful that'll create some sort of interest in the rental market that'll be looking at the house we want to rent.
Yeah, and what that does, when you really go down to that level of detail, it helps you avoid overestimating your rent, right? And overestimating rent is one of the fastest ways to kind of turn a promising investment into a stressful one. And we want to make sure that doesn't happen for our investor clients.
Yeah, and short-term rentals are always a question that is being asked, and those are a completely different conversation. Charleston is a tourism-driven market, so it's easy to understand why buyers are interested in that vacation rental income, but our city has gotten pretty regulated on those short-term rentals, and rules can vary depending on whether it's in the city of Charleston, Charleston County, Mount Pleasant, Folly Beach, Isle of Palm, Sullivan's, or another area. And you have to really, drill deep on that to figure out what that means for your property that you may be targeting.
Yeah, and one of the things we're seeing too in the surrounding counties that might not be your typical short term because they're close to the beach or things like that, is you're seeing specific neighborhoods that are actually just making those decisions, even if the municipalities are not. And you've got to keep that in mind too. So, and again, before buying with short-term rental income in mind, you need to verify whether that use is allowed, like we said. And so that's a big thing that is going to be something we look into. And even if the property has been used as short-term rental before, and that's something that we're really seeing is those rules can change very quickly, and you've got to keep an eye on that.
There's also that midterm rental option, which can appeal to traveling nurses, relocating professionals, insurance. We've had one of our rental properties, we've been called when someone had water damage in their property and needed like 3 months. You may have to consider furnished or unfurnished, right, for the temporary housing. So those midterm rentals can be interesting, but they also need to be evaluated carefully. That's where that vacancy piece might need to be really broken down to know if you can sustain that. And of course, everything he just mentioned, the HOA rules, furnishing, utilities, all that stuff matters.
Yeah, I actually met an investor a couple of days ago, and they have a midterm rental that they actually have in Somerville in Berkeley County in a very traditional neighborhood. She said she's booked in midterm rentals through the end of 2027. And it's furnished. And so again, that's an opportunity, that she took advantage of. So the key is whatever your rental strategy you choose, evaluate it like a business, not like a house, right?
We're big on that, making sure you approach it from a business standpoint, because financing is another major part of buying an investment property here in Charleston. Some buyers might use conventional investment property loans. Some might use portfolio portfolio loans, and some use equity from a primary residence. We're actually going to be putting together a workshop that you can find, some input on that or some thoughts on that we're going to talk to people who are in our past client database who might have equity in their homes. They want to use that to maybe buy the other property. We have some experience with that.
Yeah.
And then you also have DSCR loans, which I'm going to let Joseph break down.
So DSCR stands for debt service coverage ratio. In simple terms, the DSCR loan is often evaluated based on more the income potential of the property than it is on a buyer's traditional, like how you would qualify for a loan. Honestly, the lender is essentially asking, can this property support the debt? And that actually is a good option, particularly for some who may not qualify for a traditional investor loan. The property itself could qualify for it. It's a little bit easier of a process.
Make sure you know, back to that HOA and all that, we have learned in researching that loan that sometimes some of these higher HOAs of a neighborhood can maybe push it out of your comfort zone. So again, you just got to do the spreadsheet. Yeah. So the loans can be useful for certain investors, but they're not magic, right? Yeah. So they may require those larger down payments, stronger credit reserves, higher rates, whatever. That is why buyers should speak with a lender early, not after they find the property. We're a big proponent of whenever we start the consultation with a buyer or an investor, we get the financing piece in there at the exact same time before we go look at anything. So emotion doesn't drive the business.
Yeah, and also one of the things that we always remind any buyer, especially investor buyers, is just because you can doesn't mean you should, right? So you could qualify from a lending standpoint, and the DSCR is a good example, is sometimes those will qualify. You also have to weigh that against your risk tolerance as an investor. And we've said this before, right? A big thing in Charleston is, insurance, especially flood insurance, can impact this. So a property that obviously is in a flood zone near water, is older, has an older roof, has some sort of risk that goes to it. We don't know what that looks like until you dig deeper in the due diligence, but only the numbers account for that reality. So we need to make sure we know what those are.
And investors need reserves because, of course, just like home ownership, if something happens to the HVAC, what if the insurance increases? What happens if there's a vacancy? What if the tenant moves out and repairs are needed in order to get it re-rented? If every month has to go perfectly for that investment to work, that is usually a sign the numbers are too tight. You want to have the rent to cover the majority, if not all, of what that house needs to sustain itself.
Yeah, 100%. Again, just to bring in another story, I spoke to an investor yesterday who was one of our agents, and they are now thinking about selling one of their investment properties because they realized that the numbers were tight. And if they had to do anything like a roof replacement, HVAC, it just put them in a cash situation that didn't make sense. So it's, again, a logical decision. There's no emotion. So one thing we talk a lot about too is appreciation versus cash flow, right? This is an important conversation to have, is the difference between the two. So some markets are primary cash flow markets, right? I mean, people can buy properties in different parts of the United States that honestly cash flows and they may not see a ton of appreciation. Charleston is a little more nuanced, right? Because of the demand, location, lifestyle, as we've always mentioned before, many investors are attracted to long-term appreciation potential. Now, that is making some people a little bit nervous just because the appreciation hasn't been as much over the last 3 years, but it's still appreciating nonetheless.
Right. And it's not a guaranteed, and appreciation does not pay the monthly bills. So you have to be in, we always talk about the long game. Joseph and I have totally committed to the long game, and that's made us comfortable and good. We said it, we know it's appreciating either higher or lower depending on the year. But if you're buying primarily for long-term value growth like we are, you still need to be honest about how much you may need to carry each month. So we do those numbers on a regular basis just to ensure the property is still a good fit for our portfolio.
Yeah, because some investors are comfortable with a lower cash flow if they believe strongly in the long-term value of the location, but that should be a conscious decision, not a surprise.
Exactly.
Right? You don't want that to just show up.
Yeah, a good investment decision is not always the ones with the highest projected return. It is the one where you understand the risk, the numbers, the timeline, and the reason that you are buying, and having that consultation. We always talk about this. We're super committed and passionate about that consultation, and we'll help you either plan to buy or talk you into a different process or a different strategy depending on what your numbers reflect when we do the consultation.
Yeah, 100%. So things that we look for when we're helping someone evaluate investment property, we're looking at more than purchase price, as we said, right? We want to understand the neighborhood, all of the things that we've discussed, the demand, the HOA restrictions, everything we have on there. And then that leads us into strategy, which you're always big on exit strategy, right?
I always like to know the exit strategy before I commit to anything, but that's kind of a smart way to approach it. For instance, could this property be easily sold later? Would it appeal to an owner occupant or only to another investor? Could it become a primary residence one day? Could it work as a long-term rental if you had it in a short-term scenario and that rule changed? So knowing all those different trajectories and feeling comfortable with them, that's the flexibility that matters, because the best investment properties usually give you more than one way to win an exit.
Yeah, 100%. So some mistakes that we also want to avoid going through this, right? Assuming yesterday's numbers still work for today. That's a big one, right? Relying on the estimated rent without actually going through comparable rentals. And this is something that we bring in the professionals on this. I mean, where we have a lot of experience in investing, we have partnered with property managers that help us look through those, right? Another mistake is assuming short-term rental income is allowed or guaranteed or could stay long-term, right? That's something that you have to be prepared for. And then buying property because it feels exciting. This isn't a personal purchase, right? This isn't for your next home, your first home, or any of those. We really want to approach it from a standpoint that is numbers driven for your business.
It's back to, if you love Charleston and you've visited, maybe that place you've been like renting isn't going to fit your budget, but you can invest somewhere else in Charleston and that income helps you have the vacation you love, right? So what we want to make sure you recognize and pay attention to is if in 2026 that margin for error might be thinner, doesn't mean the opportunity is gone. It just means that investors need to be more disciplined and have a really smart advisor who knows the local markets.
Yeah, and I think one of the things too would be the desirability, and this goes back to kind of what we said earlier about making it because it feels right, is a lot of times your investments may be in areas that you would not consider, not because it's not desirable, right? But just be careful you're not picking me like, ooh, this would be a fun place to live. This is about what works from a business standpoint, right? So again, this is still a smart move, right? Investing in real estate in Charleston and everything is a very smart move. It's not hype though, right? We're not making assumptions, not just because someone else is doing it. It's just a business decision that we want to help people make.
Yeah, the main takeaway is it's not a broad sweep, right? It's the right property in the right location with the right numbers and the right strategy. That becomes a really meaningful long-term asset. And so before you buy, just slow down, know your numbers, understand the strategy you have for it, verify the rules, get insurance quotes to understand. They have landlord packages as well as homeowners, and we've had to do that research as well. Yeah. Plan for maintenance and vacancy and make sure that the property supports your overall big financial picture.
Yeah. And again, patience is the name of the game, right? This is just like any business that you're building. You may be looking at 10 properties to narrow down to put on offers on one of them to see even if it works for your numbers, right? So you just want to make sure that you have patience on that. So if you are thinking about buying investment property here in this area, or just need some advice on investing in the area, this is something that we love talking about. We love to help you get through that process.
Yeah, because real estate investing is not just about buying more property. It's about buying wisely so that property really serves your short and long-term goals, which we say all the time. So check out a lot more of our videos. Like I said, we've touched on so many different things, the trends in Charleston, different little micro things like flood insurance or whatever. And we would love to be a resource because this is something we have really learned firsthand on how to go about doing that using equity from properties. So anyway, reach out to us anytime and we would love to help you in any of this research.
Have a great day. Hey everyone, Lynn